Hi there, this is Mike Rydell with thecropinsurancepodcast.com. Thank you so much for joining us today. So today we wanted to talk about your APH databases and how you can use it to determine your approved yield. If you don't have any actual production history, you can use your county T yields to come up with that approved yield. Depending on whether or not you are a new producer, you will either get new producer status or have to use the variable T yield rules in order to help determine your approved yield. So let's take a deeper dive into the APH databases and learn some more. A fundamental aspect of your crop insurance is the APH database. Picture it as your reliable data table, just like an Excel spreadsheet, meticulously documenting your farm's actual production. This important information plays a pivotal role in determining your approved yield, which is a vital factor in tailoring your crop insurance coverage to your unique farming history. In order for it to work, you'll need a minimum of 4 years' worth of data to establish a reliable average for your approved yield. Keep in mind that 4 years is just the minimum. The APH database has the capacity to hold up to 10 years of historical data, offering a wealth of insights for making well-informed decisions. Let's address a common concern. What if you don't have 4 years of historical data for your APH database? Don't worry, county T yields step in as the missing piece of the puzzle. These invaluable figures can be used to fill in the gaps in your calculations. Finding your county T yield is a breeze, as it's available in your county actuarials. Simply input your specific crop information to access this essential data. Now here's where it gets interesting. Whether or not you qualify for a new producer status will determine the percentage of the county T yield you get to utilize. If you're wondering what that status is all about, join us as we venture to a picturesque winter wheat field just a short drive north of Great Falls, Montana, to learn more about the new producer criteria. So today, one of the things we wanted to talk about was APH databases and the new producer status. In order to qualify for new producer status, it needs to be the first time you've seeded that crop in this county. So the way it works is you look at your basic APH database, which will be empty because you don't have any history. If you qualify as a new producer, you'll be able to have 4 years of county T yields in there, and you'll get 100% of the county T yield for each of those years. After each harvest, you're going to put in your actual production into that database, and one of those county T yields will fall off. Once you have 3 years of actual production, you will no longer qualify as a new producer. You will then need to use the variable T yield rules in order to factor your APH. Please keep in mind that the years of actual production for a particular crop are county-wide and not just for any one database. So if you're seeding multiple units in multiple years, each of those years counts against you, so to speak, in terms of the new producer status. So now that we know a little bit more about what the new producer status is, let's look how that translates to your coverage. If you'll remember, your APH database is just a table, kind of like an Excel table, where you need to put in your actual production history. And in this case, you don't have any, and so you need to have 4 years of history in order to calculate your approved yield. So we're going to plug in your county T yield in place of your actual production. But because you're a new producer, and the first year where you have 0 years of history, you're going to get all 4 years of the county T yield at 100%. When you add 1 year of history, you're going to get 3 years of your county T yield at 100% as well. The same with 2 years of history, you're going to get 100% of the county T yield. And then once you have 3 years of history, the new producer status falls off of your policy and you have to go with the variable T yield rules. It just so happens that with the variable T yield rules, when you have 3 years of history, that 4th year of the county T yield, you get 100% of that calculation. So let's take a look here at what happens if you're not a new producer and you have to use the variable T yield rules. So right off the bat, what you'll notice is when you're using all 4 years of your county T yield, instead of 100% of the county T yield, you only get to use 65%. So that's a pretty big difference. After you have 1 year of history, now you get to use 80% of the county T yield for the next 3 years you're averaging. When you have 2 years of your actual records, now you get to use 90% of the county T yield. And again, just like when that new producer status fell off after your 3rd year of records, you get to use 100% of the county T yield in that database. One kind of big asterisk or note on this is it's countywide. And so if you have a couple of units that you're seeding every other year, you're going to get shoved into a variable T yield, and these other rules at the 65%, 80%, 90% on your county T yields, when you have that many years in the county, it's not necessarily in that database. So keep that in mind. If you had 3 years of history in a certain crop in your county, and you have a brand new database that you put together, a new unit, you could end up using 65% of the county T yield for that database because you're no longer a new producer. So keep that in mind. Now let's take a look at an example where we compare new producer and not new producer. So the other data table we're using is using the variable T yield rules, and the other table is the new producer rules. So if you're a new producer, and let's say that the county T yield is 63, you're going to use 100% of the county T yield for all 4 of those years. But if you're not a new producer, you have to follow the variable T yield rules, and you only get 65% of the county T yield, which is 40.95. So when you average that out, your approved yield for a non-new producer is 40.95. So now we're entering our first year of production into our tables. Both tables are going to still use that 70 bushel average the same because there's no difference because it's your actual production. But the remaining 3 years that you need to calculate your approved yield, you're going to use your county T yield, but you get a different percentage whether you're a new producer or using the variable T yield. So if you're a new producer, you get 100% of those. And if you're a variable T yield rules, you're going to get 80%. So right here, you can see the difference between the two is starting to get pretty substantial. So now we're entering our 2nd year of production. You'll notice that it's 35 bushels an acre, which happens to be below 65% of the county T yield. Later on, we'll talk about what that looks like with different options on your policy, or you can head over to our podcast to find a little bit more information on the YA option. But for now, let's just look at the difference of adding 2 years of history into the tables. New producer, you're still getting 100% of that county T yield. The variable T yield side, you're getting 90%. So it's not as big a difference, but there's still that little bit of difference between a new producer and not a new producer in using those variable T yield rules. Now we're entering our 3rd year of production into our tables. You'll notice that we only have one table now because of the new producer rules. Once you have 3 years of actual production history, you no longer qualify as a new producer. So in this case, you're going to only have 1 year of your county T yield left to use in your average. But with the variable T yield rules, when you have 3 years of your actual history, you get to use 100% of that county T yield. So the answer is the same. And then obviously, if we entered our 4th year of production, it would be all of our production now. So that's how you're going to use that new producer status versus not having it, and what it looks like in your tables and figuring out your approved yields. A huge thank you to my customers, Rich and Vivian Charleston at Charleston Ranch, who let me out here today to film. Also a big thank you to Tyler Starman of Gold Star Farms as well. From my family to yours, thank you very much for listening. I sincerely hope that this presentation has been instrumental in enhancing your understanding of federal crop insurance. If you find value in our podcast, we kindly encourage you to subscribe and spread the word among your friends and neighbors. To access further information, please visit our website at thecropinsurancepodcast.com, where you'll find the latest podcast episodes, articles, and exciting new features conveniently located in one place. This information is not all-inclusive and is meant to be used only as general guidelines for educational purposes. For additional information, please see crop provisions, reference the Crop Insurance Handbook or Loss Adjustment Manual, or contact your crop insurance agent. This institution is an equal opportunity provider and employer.